Hey, I'm Mindy Kinnis. This is The Daily Rage. I am just back from vacation, so very much looking forward to getting back into the markets tomorrow. Recently, in the Daily Rage community, there's been a lot of talk about the rubber band trade, so I wanted to go through that. It's a very, very simple setup. You can test it out, see if you like it, and if you do, you can add it to your repertoire. So what we're looking at here, this is a new chart, just a clean chart, nothing on it yet. This is the Russell futures contract on a 10-minute time frame. So what we're going to do is we are going to add a study. The Kellner channel is made up of three parts. There's an upper band, a lower band, and a mid band. So let's go through. We don't need to change anything on general inputs. The default is 1.5. That's not actually how I use it, but I'm going to show you the difference just so you can see why I do what I'm doing. You can change the style, and of course, you can change the color. Now, I already have these set default for me as green. Most of the time, you will see the upper band as one color and the lower band as a different color. I keep them the same color just so I know what the heck they are. Like, I want to know without even having to think about it. Okay, green lines on my chart on a 10-minute time frame, that's a Keltner channel. I just know that. And then the midline, I have it as white. Oftentimes you'll see it as gray. So let's put that on here and see what this looks like. Okay, so here's our upper line, green, our lower line, and then the white midline in the middle. What you'll notice is that a lot of these candles are outside of this boundary line. I think of this as a border or a boundary line. And they came outside here, cruised down, went outside of it here, cruised back up. And this is why I don't use the 1.5 ATR. Let's shift this and you can see the distinction. Let me edit this. Go to customize. We go to inputs and I change mine to 3. Now this looks better to my eye. In other words, it kind of rode along this top boundary line and then cruised down. It always wants to revert back to this midline. It went below that almost all the way to the bottom and then eventually came back up, attempted to go higher, couldn't handle it, came back, hit that midline again, and then kind of flattened out toward the end of the day. But the reason I like the 3 ATRs better is because it holds more in. And the way that I kind of think about this, it might seem kind of silly, but I think about this as the comfort zone. These candles are more comfortable inside this zone. It's almost as if they go outside, they don't have enough oxygen out here. And as you know, a candle, in order to burn, needs oxygen. So it wants to be in this kind of range in between these green border lines or boundary lines. Now, if you want to get even more fancy, what you could do is we could come and add another study, and you would pick Kellner channels again. And in this case, you could keep it at 1.5. So then you would have 2 sets of Kellner channels. So let's look at what happens in this case. This way, you would know that this is like way up top here. It's highly likely that it's going to come back down within this range. And here, like between this line and this line, again, it's highly likely that it'll work its way back toward center. Now, why do I not use it this way with all these different lines? Many of you know I am not a big proponent of having too much junk on your charts. So I don't have all these lines, but they can be very helpful if you watch them enough and get to know whatever contract you're trading or whatever stock you're trading. If you get to see how it typically moves, these things can be very, very effective. Now let's take this off because, like I said, I don't usually use this 1.5 thing. So let's just status that one off. Now, the whole point of the so-called rubber band is that when these things get too far stretched out from this midline, there is a tendency to snap back, almost as if you're pulling out a rubber band. The further out that the rubber band goes, the stronger it wants to come back to its normal shape. So this is exactly the same thing. You can think of these lines outside on top and bottom as a rubber band. And in this case, like this got stretched all the way up to here. And then it just wanted to snap back, that it almost went all the way down, worked its way back up, and then kind of flattened out. Now that was the Russell. Let's take a look at some of the others from today. If we go to @YM, this is the Dow futures. And in this case, right after the open this morning, huge wick up, but couldn't sustain it because it was way outside of this boundary line. So then it came back into the comfort zone and then kind of just like, tried riding this line up. Also had quite a bit of a sell-off, cruised down here, didn't make it all the way to the bottom, but definitely close to that with that wick right there. Headed back up, again, hitting that center line, which it really likes, the midline, and then tried another rally toward the end of the day. Didn't really get anywhere, but made the attempt. And if we take a look at the NASDAQ from today, this is a perfect example because as you can see, right after the open, it shot up, went up and above that top boundary line, didn't like it out there, came back down towards center, big, huge sell-off, and then just rode that bottom line again. Like as it got outside of the boundaries, it always came back in. So then it worked its way back up all the way, in this case, to the top, peaked out just a little bit over there, didn't like that, came back down, headed toward the midline. And again, like sort of made an attempt, but didn't really go anywhere at the end of the day and almost ended up back at that midpoint, its comfort zone. So that is how to do a rubber band trade. Test it out on whatever market you like to trade and try it out with different ATR values, or you can put more than one Keltner channel like I showed you and see what works best for you. But like I said, it's a very, very simple concept. It's just, if this is way up here at the top, it likely is going to head back to center. If it's way down here at the bottom on these boundary lines, it's likely going to head back up to the midline. I'll be doing a live presentation on Friday, how to trade with no risk to your own money, what you will discover on this free webinar, how this whole trader funding thing works, and if it's a good fit for you. The number one thing that will kill your chances at becoming funded, and finally, a prop firm comparison so that you can pick the best option for yourself. I'd love to see you there. I'll link you to this page, fill out your details, and I will send you the information. I'm Mindy Kinnis. Thanks so much for watching.